every 100 years, we pretty much go through these cycles, right, of any reserve currency. You know, we had the pound, we had Portuguese dollar, and then now we're in this phase of the US dollar. And I think after this, we've been 100 years, we're, printing a lot of money, massive debts. Pretty clearly, the US dollar is in some sort of decline. And what takes that place? The government's signaled out over the last few weeks that it will be stablecoins.
Hey everybody, welcome back to the Defiant podcast. I'm your host, Vinny, here with Vikram Arun, who is the co-founder of Superform. He has a rich background in both crypto and finance. He co-founded Ledger Capital, worked on Wall Street and biotech equity research, and co-led a $100 million DeFi fund at Block Tower Capital. Now he's building an on-chain yield marketplace to simplify earning yield across chains. Thanks for being here, Vikram.
Thanks for having me. Excited for this.
Yeah, me too. So let's get started just with a little bit of an intro. You've described crypto as the natural evolution of money, and I love this concept. Can you elaborate a little bit more on how you see this transformation, particularly in the context of financial systems shifting to on-chain solutions?
Yeah, I hope most people in crypto would agree that crypto is a better form of money at some point. But when I'm thinking about money, even the dollars that you have in your pocket right now, it's a combination of numbers and trust. And those are two things that the blockchain actually just codifies. And it's like, puts it down to the very root layer is like, I can transact using numbers that everyone verifies. And I think that's the core tenet of why we have all these financial systems. Where crypto is right now is we're focused on making better versions of cash. And that's why we have stuff like stablecoins coming up. But eventually we, I think, go to even harder money. And then we come back to the whole crypto native asset side of it. But yeah, I'm a little bit of a history nerd too. And it's funny how like every 100 years, we pretty much go through these cycles, right, of any reserve currency. We had the pound, we had Portuguese dollar, and then now we're in this phase of the US dollar. And I think after this, we've been 100 years, we're printing a lot of money, massive debts. Pretty clearly, the US dollar is in some sort of decline. And what takes that place? The government's signaled out over the last few weeks that it will be stablecoins. And I think that's like huge. And one of the been fighting for so long for good legislation for crypto assets, and it's finally coming for stablecoins. But eventually, we have good precedent for stablecoins. And then we move forward into the same stuff happening for BTC and all my ETH bags.
Yeah, I love that you mentioned that we go through these cycles. I was explaining the concept of stablecoins to one of my normie friends the other day. And I was like, you know how the US dollar used to be backed by gold? Stablecoins are backed by USD. And I had that aha moment of like, oh, whoa, yeah, it's the same concept, just with a new technology. So
yeah, new rails, better stuff underneath.
And better bags, I hope.
Yeah.
So your work is focused on making crypto-based financial tools more accessible to everyday users. What sparked your passion for this mission, and how does broader financial literacy impact society as a whole?
Well, my start in crypto came from really just playing around with all the stuff on chain back in 2017. We had like the first generation of those AMMs, which are just order book AMMs, like IDEX and Fork Delta, Ether Delta, and really what I saw was those AMMs were just functioning like how centralized exchanges were, but they were truly limitless. And the idea that we could create those DeFi protocols entirely on chain that anyone could interact with was really powerful. And then obviously in 2020, you had stuff like Uniswap come around, and that's when it became real, right? Like these things can actually function by themselves as pure hyperstructures. You deploy them once, and anyone can do whatever they want with them. The ability to actually make those tools available and integrate them in normal financial applications, I think, is the most interesting thing going on right now to me in crypto, is like the financialization of all those things that we built, which maybe is a reductive way of thinking about the underlying infra technology. But at some point, we prove that it works for this, and then it works for everything else. And yeah, I mean, personally, with Superform, I've always thought that the biggest barrier to a lot of stuff that happens on chain is just because people don't know what's going on. And the reason why yields are so high is because there just aren't that many people that know how to actually access those opportunities. And that idea of information asymmetry has been good for people who have been in crypto for a while, but at the same time, that's exactly what's stopping crypto, I think, from scaling anymore.
Yeah, I always think about how, yes, the internet gives us this wealth of information, but if you don't know what to type into the search, then you're not going to find that information. So, and then you talk about crypto being a niche of finance, which a lot of people already are not, either interested in or just don't know about. Like, yeah, it can be really impossible for most people to get to this conversation.
Yeah. The entire search and discovery process of what to do in crypto, doing all my research, it's everywhere. And that has to change if we're actually going to integrate this stuff in more than just our desktop apps.
Yeah, absolutely. Let's talk a little bit about stablecoins. I feel like everyone's been talking about them for the last couple of months, but I mean, huge news week in and week out. So they're often seen as the backbone of the crypto economy, I think because of some of the things you were talking about of it being something that is now in a mainstream conversation. We're now seeing bills for stablecoin regulation. So definitely making those strides for the whole industry. What's your perspective on their role today, especially when it comes to mastering yields in order to stay relevant?
I think stablecoins right now are proving that they're better for payments already. And even the stuff that's happened so far is really like differentiating stablecoins between what they're actually used for. So you have very basic payment stablecoins that could be eventually bank regulated, and then everything else that is in DeFi, yield bearing, whatever extra utility you want to have on top of it. I think that we're going to continue to have those kinds of stablecoins be used for new consumer applications, those payment stablecoins, and then really what happened over the last week is just totally greenlit the entire opportunity for us to actually add more utility to stablecoins that could be in the form of yield. It could be just feels like a dollar that you're dealing with in your bank account. Like there are rewards that are associated with it beyond just what I'm actually earning on chain. And yeah, like the actual consumer applications for this new payment rail, I think is going to be entirely, we don't even know how this is going to look like because most of these applications have just been made possible over the last 6 months due to all this new infrastructure. So yeah, pretty exciting.
Yeah, everything just brand new. And again, going back to the historical backing, right? You think about like, okay, first we talk about cash and then we think about credit and then we think about all these other, instruments that are spun off of fiat. Like it's happening in real time and we're like watching it happen. Yeah. Recently, users were reported earning an average of 20% APY through on-chain yields. Is this level of return sustainable in the long term as the market matures?
I think that we're eventually going to have yields a lot higher than 20% again.
Okay. Say more on that.
Yeah.
Tell us where to sign up.
I mean, yeah, it's demand for these crypto assets, right? So if we're actually going into a world where there's going to be, 500 different stable coins that are all being owned by tech company A, fintech company B, and eventually at some point, it's now actually possible for us to have stable coins below a $50 billion market cap and have like really no banking sort of infrastructure around supporting that. That was what the Genius Act proposed. And if it's that easy, then the way that those projects compete is going to have to be on some mixture of returns and like what I'm offering people to stay in my network, right? It's almost like credit card points or something, right? And, there are definitely cycles of this. And I don't think that we've scratched the surface at all with 20% is not high enough.
I concur.
Yeah.
And that's great to hear because I mean, competition is always great, especially when we're like finally going to be competing for an increased user base. I mean, that's fantastic.
Yeah, I will add that most of those things are always going to be transient, right? Like the end state of what I can actually earn dollars on chain is going to be treasury base yield and then something more for some risk premium on chain and then demand for that asset. But in the near term, while we have this like Cambrian explosion of those stablecoins, would absolutely think that to get people to use new things, that cost of capital is going to be a lot greater.
And do you think this is going to be attractive enough and feel safe enough for, our normie friends and family to get on board?
I don't think that the base layer of that stablecoin is necessarily going to be something that I would ever tell my mom to go open, go memorize your seed phrase, get a Metamask account, and then, go ape into this 50% new pool from PayPal or something. But I think what will be accessible to people are more structured products built on top of those on top of those stablecoins that have some sort of safety and insurance built into them, and those function way more like managed on-chain funds almost than the actual like core DeFi primitive. But yeah, I think that kind of comes back to some of the things that crypto does really well and doesn't. And the core tenet of crypto is decentralized. I'm in control of all my stuff. But actually, that design space makes it very hard for new people who actually don't trust themselves to go do something on chain. So I think we're going to recreate like that middleware layer again. And it'll be good because now it's more transparent, there's more composability, everything else. But users will interact with some middleware layer rather than the end product on chain.
The PR Genius is a top crypto PR and growth marketing agency, helping brands globally with expert PR and strategic growth marketing. They've worked with 300 plus projects like Movement Labs and IO.net. Unlike traditional agencies, they charge only on performance. Their services include earned PR opportunities and marketing services to help boost wallet holders and organic X followers. Learn more at www.theprgenius.com.
Yeah, let's talk a little bit more about that, because we live in a societal, cultural moment where people don't even remember their passwords, right? So like the whole... like so many of our systems require a forgot password, send a link, like whole situation for a lot of people, just because, if they can't remember their passwords, I don't know that they're going to be interested in memorizing a seed phrase or, writing it down and remembering where they put it,
Or your password gets stolen from, some massive Chrome 0-day or something, right? Like, yeah.
Right, exactly. So I do fear, I should say, that there is, a kind of learning curve that's going to be necessary, like a kind of reintroduction of how we safeguard our information to get there. But Superform integrates Web 2 familiarity with Web 3 innovations. You guys have launched a mobile app, right? So how has this hybrid approach resonated with your users, particularly those that are new to crypto?
Yeah, so I guess touching on the first part of that, which is the existing user base. It's crazy how many hoops they jump through to actually, even use desktop apps right now. And I would say even, some people I know myself, we don't even use a lot of new DeFi protocols these days because of the added complexity that, what's the like incremental benefit of me doing something, right?
Right.
And it's tough, New users, I think we've set a new bar for those users to come on chain. And thankfully, this is in part due to a lot of the new infrastructure that has come out over the last 6 months. We have, like smart accounts. We have these composable modules that you can just, install, uninstall, just like you would a video game. It makes it super easy to actually just like choose what functionality you want and still be secure. And then, we have like a renewed emphasis on actually meeting users where they are. It's, why we have the mobile app. And I think it's been tough because most things that get crypto people, it's hard as a company to prioritize actually bringing in a new user base when all of the liquidity and the TVL is, just still on desktop. But
right.
We're going to have passkey logins. You're going to have email logins. It's going to feel like you're just using a normal fintech app. And, you could argue that the same thing is probably going to happen with existing fintech apps getting on crypto rails, but all of it converges at some point.
Yeah, and the familiarity is like the perfect thing to trick people into, trying something new, really. So that makes a lot of sense. And then also automation is at the core of Superform. So can you briefly explain how automation helps to simplify yield generation across multiple chains for these users?
Yeah, this kind of goes into the middleware layer, right? That will end up existing between the user and whatever the core primitives that are deployed on chain. The first process, right, of me deciding what opportunity I'd like to get on chain is like, I'll do a little bit of research. We're going to look at, security, all the stuff relevant to the protocol. And then after that, that can change at any moment, right? Like there's another dependency for that protocol that's impacted. I would ideally, as a user, should be paying attention to all this stuff. But even if the existing crypto native users are used to, doom scrolling Twitter and like always, being on Telegram, like finding like the latest stuff, that's not something that we can expect out of this new cohort of users. So we're pretty much, creating this automation layer in between that can be run by us, third parties, anybody, and then still be decentralized and verified on chain. So we're not really giving up the, functionality in DeFi that I think drew people to DeFi in the first place. But I think we need some model that's somewhere in between where users are still trusting another party, but they can still verify what that party is doing, would be the middle ground.
Yeah, and I think, Obviously, with investing, you have so many different kinds of investors. You have the people who want to be watching the prices rise and fall throughout the day. You have people who want to put it in there and check on it 6 months, a year, 10 years from now. So like it's really important to create things that fit all of these users because they're all looking for something different. And automation, I think, something that sounds attractive to me. That's for sure.
Yeah, returns are changing all the time. I think if you were to look at the top 100 pools on Ethereum, the highest yielding stablecoin pool changes like every 8 hours.
Wow.
Right? Crazy.
Stress.
Yeah.
I am stressed.
Yeah. And it's like, as an individual user, do I care about like the minute optimizations? Maybe, probably not. But I still care enough to know that my money is being allocated properly, right? And safely. And sometimes those returns could be changing because of something else going on in collateral markets, whatever else it might be.
Right.
So yeah, it's important to stay on top of it. And most users, even now, crypto users aren't really doing that. But if we're not doing it, then we can't expect anyone else to.
Yeah, absolutely. Yeah. That is so true. Let's talk a little bit more about the Genius Act that you mentioned a while ago. So it's obviously been a very hot topic in Congress. This week got passed by the Senate and is going on to the House. So this is a very exciting time. Are you optimistic about its potential impacts on the crypto sector, and how might it affect platforms like Superform?
Very optimistic. Really, I mean, it took so long to find something that the government could get behind. And I think it's a little bit ironic, sure, that people in DeFi were just waiting for something in the government to happen that told them that, gave them validation to what was being built. But regardless of, the intentions behind that, what the Genius Act allows is for us to finally have a clear path forward for all these tokenized assets, starting with stablecoins. Mentioned that it's pretty much saying that we're going to have USDC, which will be like the payment stablecoin, TBD, whatever USDT becomes. And then everything else, most of these like DeFi stablecoin structured products from protocols, like Athena, Us, Resolve, lots of other DeFi protocols that have created these effectively like synthetic yield-bearing dollars. Those are going to be viewed in a light where if they're properly decentralized, then we can talk about it. But if there's any degree of decentralization with them, then we're going to have a conversation. And obviously, like all this stuff is evolving so quickly, but like roughly, that's been the avenues. And it's hard to see how clearly like setting those boundaries isn't super bullish for people building those products, because it really just pushes the industry into a better state, right? Regulation is kind of the forcing function sometimes for people to get their stuff together. And I think it's a great thing that we're appropriately trying to create these products that are decentralized, that are not going to have the same problems of yield-bearing stablecoins of a couple of years ago. That being said, there's definitely some gray area around what decentralization means, and sometimes premature decentralization can be not good. Faking decentralization, and it could actually end up imposing more security concerns than actually having like a properly centralized product. And that's what Circle is, right? So there's definitely like a bunch of different vectors here, but I think what the Genius Act what we're going to see in a year is going to be a bunch of stablecoins. They're all going to be able to offer yield on their stablecoins. And that's because the Genius Act, they require that those stablecoins are backed by short-term collateral, cash, whatever it might be. And that short-term collateral can be T-bills, any corporate debt, whatever, as long as it's like reasonably liquid, I think was their terming.
Love that. Reasonably liquid.
Yeah,
okay, what does that mean?
Yeah, it's like nothing with like a long duration. It's just like they need to know that those are like real reserves, like cash and cash equivalents pretty much on a balance sheet. And now that we're going to, with those stablecoins being able to take that as collateral, I think we're going to have a bunch of those stablecoins now actually just have treasuries on their balance sheet, right? And that's going to create this whole virtuous cycle for the American government to actually have more people across the world investing in American assets through stablecoins. So yeah, it's like great, a genius cycle that they created that I think is going to end up creating a bunch of demand for stablecoins on chain. And then eventually stablecoins, they flow into lending markets, they increase rates for crypto native assets. And then at some point, that flywheel gets triggered the exact same way for every other tokenized asset that comes on chain.
Yeah, I think it's really fascinating how as soon as politicians in the US government realized that stablecoin regulation will be good for US dollar dominance, they were like, wait, what? Say that again?
Yeah.
It's like all of a sudden it kind of like changed the conversation completely for them. So do you see that happening with other assets? Like, do we just need to find ways in which these crypto assets can serve some sort of cultural or political use case for the government?
Yeah, I think it's sure, if America's going to be the first one to do it, great. But I think every country at some point is going to reach this realization that I just want to have my assets in a marketplace where they have the most utility. And that is on blockchains, whether it's on Ethereum or somewhere else, like somewhere in the ecosystem, it's going to be somewhere on chain. I think that could easily happen for other like hard assets, like, could happen for real estate. Even people, just generally like tokenizing their like mortgages, like loans. But again, there requires to be like some sort of demand for that natively on chain. And like we're still in that bootstrapping phase. Like Apollo recently has put some of their credit funds on chain. But how do we get like that first initial push of capital to move into it? And I think it has to come after we've really explored everything with stablecoins. Then people are going to be looking for the next thing.
Yeah, as soon as they're like, all right, that's old news.
Yeah.
Get 20% APY on ETH with the High Growth Vault by Kelp in one click. High Gain uses blue chip DeFi strategies with restaked ETH across Aave, Pendle, Usual, and Elixir, managed by strategy pros Ultra Yield and Upshift to deliver highest rewards on ETH, all in just one click. Deposit your ETH, receive High Gain ETH, and stay liquid in DeFi. Trade or use High Gain ETH on platforms like Pendle and Balancer while still stacking rewards. Follow along these steps to get started.
I love that you said the importance of demand, because I think something that was happening in the last crypto bull run was people were like, we can put real estate on chain and we can put medical records on chain. We can, put all this stuff on chain. And everyone was like, I don't care. Like nobody wants, so
Yeah.
It was almost like putting the cart before the horse, people building the technology before there was a market for it. So do you see that changing in the next bull cycle? You think we've learned our lesson here?
Almost definitely not. We're going to try. But I think this time actually could be different. I think there's enough people that have been squeezed. People are looking to improve margins. Like business is not the same as it was 4 years ago, right? Like market's totally different.
Yeah.
If you mentioned like health records, right? If I'm a hospital system, I'm really getting squeezed right now, right? Like I have the payers, my provider relationships with the insurance companies. And we're in a position now, I think, where crypto can finally come in and say, hey, all these people that have made you upset over the last couple of years, now we have this new infrastructure for you guys to settle not just transactions through stablecoins, but that'll probably be like the first thing any company decides to do is they just switch to stablecoin rails. But yeah, I can decide to put my policies on chain. I absolutely can do that stuff, but it has to happen first through like some really motivated party, right? And in this case for stablecoins, that motivated party was the American government. Like it doesn't get any more motivated than that. So like,
right.
who's that going to be for health records? I don't know. Epic Health. Who knows? But I think there's like a lot of interesting experiments that could be done there.
Yeah, well, and we'll just keep the antennae, live and looking around. So last week we saw a lot of big moves in stablecoins. We saw Circle's IPO, we saw Plasma's ICO, we saw PYUSD hitting 1 billion valuation, So do you think these things that happened pushed the Genius Act forward, like in anticipation? Do you think that politicians were paying attention to this attention?
I imagine that they probably have seen how hot stablecoins have been generally in crypto, just in terms of like, we now have $250 billion stablecoins on chain. If you look at that chart, like it's exploded with or without the American government getting behind this over the last 3 years, right? I think what people are watching for sure, at least I can speak from a DeFi protocol perspective, is that so many of these stablecoins are now opting to just maximize equity value instead of launching tokens. I think it's interesting, as you have more and more of these businesses that pursue just revenue, and they have these existing like relationships and can monetize like those traditional relationships, probably going to continue to have more and more of those IPOs. But yeah, I imagine if I was a politician, I'd probably be looking at this and thinking that I had a little bit to do with the success of like Circle stock. Like I'm sure Circle stock would not be trading at $200 if it wasn't for the Genius Act. But
right.
yeah. But yeah, at least everyone's like rowing toward the same thing now.
Exactly. If we're all on the same team, like that's great.
Yeah.
The Fed has decided to hold interest rates steady. How do macroeconomic factors like this influence crypto markets and user interest in on-chain yield?
Mm. Yeah, whenever you open the Superform website, first thing we show is, just like treasury yield, real-time treasury yield against Aave, against Morpho, and everything else.
And I love the slider where you can say like how long you expect to have this stuff. And it's like the longer you hold it, the better it looks. So
yeah, it's about compounding wealth.
That's right.
Yeah.
You heard it here first.
I think people will always benchmark to what rates are there, but I think the existing capital on chain is very rare for them to like see treasuries at spike to 5% and be like, oh, you know what? Actually, I'm just going to go to Coinbase, take all my money out, and then go put my money in treasury.
Yeah, right.
But I mean, certainly, like for most crypto startups right now, like you manage most of your cash in the bank account still, right? And like most of those bank accounts will offer treasuries, and we haven't actually like most treasuries haven't moved entirely on chain because it's just easier to keep that in the bank.
Right.
What that spread is for somebody to come on chain and care about taking that extra smart contract risk is still up for debate. But I think as these protocols get more and more Lindy, like, I mean, pretty much people view Aave as risk-free rate in DeFi largely now, right? Now they have their whole umbrella thing. They have like a secured, unsecured layer. The secured layer, at least, more so like the risk-free rate. Whenever things happen in the real world, I still feel like crypto is a little bit slow to react to some of this stuff, which is maybe a good thing. It's like decoupling from the madness that's going on outside. But certainly, like, whenever rates change, we've always seen impacts to people willing to, the amount of people willing to lend out stablecoins on lending markets and everything. But I do feel like when we get more and more of those assets on chain, we end up with a system that is probably more dependent on macro, but at the same time, it acts not like just solely lagging of that macro condition. That makes sense.
Yeah, totally. And let's stay on this concept of speculation. So there has been, in my view, a resurgence in the meme coin sector. There have been all of these coins specifically tied to Donald Trump, right? We have him launching his meme coin before the inauguration. We then also, during the Trump-Musk feud, had a slew of meme coins coming out, speculating on that. And then most recently, 79th. So meme coins for the president's birthday. So does this trend signal anything to you about, how speculation is still alive and well in the crypto sphere? And what do you think the impact of this kind of trend will be on the market as a whole?
I think meme coins are great. I think speculation has made crypto as popular as it is. You could even argue that the reason why a lot of those lending rates are higher on chain is because of speculation, right? Like most of those lending rates are based on people that want to lever up on a position. And that's, I think, always going to be a core tenet of free, permissionless technology, money that's on chain. Meme coins in particular, we go through these cycles of like crypto culture really meaning something, right? And whenever crypto culture is fun, then meme coins do great. And whenever we're trying to figure it out, like I think we kind of are right now, then meme coins it's all about real utility and stuff over that. But yeah, I think the fact that President launched his own meme coin, and then I think that signaled something that was pretty good at the time, very good for like just generally people like coming on chain and like tokenizing, like almost like the whole creator economy kind of thing, right? And then it just got taken to the extreme and everyone started launching. So I think it's like everything in moderation. Meme coins, whenever the rest of crypto comes back, I think meme coins come back even harder and animal spirits return in no time.
Yeah, I've always thought meme coins, while very fun and silly, they also do kind of showcase the trends within both the crypto market, but also in like internet culture, right? And like
totally.
to have a president who is so openly pro crypto, I mean, to the point of having all of these crypto ventures, we could go into how we feel about those, but just in general, being in such a pro crypto moment versus the previous administration, who learned pretty quickly that being anti crypto is not good for politics in this current moment.
There's definitely like a right way, I think, to get people who haven't been involved in crypto. And sometimes it's really hard to toe that line because the things that are the most fun sometimes are not actually the things that you want to be onboarding people to. And that's kind of what we hope in Superform, is that we can finally onboard people to real products that they can, save and like improve their current financial life with, rather than having to onboard them to like an app like Moonshot, or nothing on Moonshot, but just the idea of like just a trading app for meme coins, right? Like we can do a lot better and onboard people to things that do that and something else, so that junk food with a little bit of like the food pyramid, I guess.
Yeah, a few Doritos is fine, but like we need those major food groups as well.
Exactly.
Yeah. Do you think that having these yield generating assets are going to be, something that people of all ages are going to be interested in? Or like, do you see there being kind of a gap in the demographics that are going to be coming onto this type of product?
If you look at the vast majority of people that would use a fintech app right now, for sure, under the age of, let's say, 40, probably not too many people that would be necessarily like saving large amounts of money until after they're like past their 20s. But sure, I think you have like millennials. We're getting older. You're gonna have a lot of people that even I like onboarding my parents into crypto, and now they they have like a ledger and stuff, and it's like easy enough to actually create pathways for us to plug in those yield products even into like a retirement account and things like that. You can plug in directly to stuff like payroll too. So I think as you have more integrations of DeFi into the real world, maybe we can increase that average age. But for sure, I mean, the people that are going to be downloading the Superform app and Uniswap or any other mobile app right now is probably like 20 to 40. I'd be very surprised outside of that.
Goat Network is the first sustainable BTC yield chain, powered by decentralized sequencers using multi-coin POS. Goat's mission is to transform BTC and Doge from passive holdings into active, yield-generating assets through a one-of-a-kind economic model that tokenizes sequencer revenues, unlocking the full potential of BTC-Fi and meme-Fi in a way that's never been done before, and creating new yield opportunities for Bitcoin and Dogecoin holders. Supply BTC or Doge, earn BTC in perpetuity. Get started through our user rewards onboarding portal, onepiece.goat.network.
Interesting, because like you said, most people don't really start thinking about retirement or savings until they're, older adults. Do you think that these types of opportunities will help young people get more interested? Because as you said, compounding is the game, right? And so if you start investing at 20, that's a big difference versus 30, right? So, I mean, do you see this maybe changing how people view savings and investment in the future?
Yeah, I hope so. If we found a way to integrate it more with like our day-to-day life, like there are a couple of fintech apps that do that now. There's like Acorn, I think, right? You can, anytime you pay, you can just round up to the nearest dollar, and then like that goes into an account somewhere. Like, that'd be great for us to just have those sorts of plugins, but instead of like buy 75 cents of ETH every time you buy a coffee or something, right? Like eventually it adds up.
Millennials buy a lot of coffee.
Yeah, I think you'd have a pretty big ETH bag at the end of that.
At the end of the year.
Yeah. Most of those users would probably not be accumulating that much if it wasn't for some like feedback loop in their day-to-day life, right? Whatever that feedback loop is, figure that out. But
yeah, and once again, just replicating things that people are familiar with, and starting small. I always say to family members and friends who see me as their resident finance bro, like you can start with $5, you can start with $10. Like I think a lot of people have this feeling of like, oh, I have to have thousands of dollars to get started, and it's like, well, not necessarily. If you put $5 into Bitcoin 10 years ago, you'd be sitting pretty, right?
Yeah.
So let's talk a little bit more about the future. What does the next phase of on-chain yield look like?
We're going to have a lot more products that generally come on-chain. I think the first one that we talked about is for sure going to be just more and more stablecoins that decide to fight in this battleground of, do I decide to provide more utility through kinds of things you can use my stablecoin for, or am I going to decide to create more things around actually like what yield I can get on it? Or is it just going to be distribution in a payment sense? So yeah, there's going to be a bunch of those types of assets, I think, that come on chain, the more and more, T-bills, bonds, like high quality real assets that come on chain, I think the base layer yield for DeFi just generally increases. Might not be too significant, but you'd still see like 50 bips percent probably at some point. And yeah, we're going to create like all these like crazy composability loops, right? Like the fact that I can now use permissionless protocols to lend out a tokenized T-bill and then borrow a stablecoin and then swap that to ETH and then deposit, like all these different things that I can assemble that, now crypto natives are like, you see like Twitter threads of people like posting like how I can somehow get 80% APY on like my staked ETH, right? We're going to see that, but it's going to happen for every asset. And obviously creating like a interface and some protocol that can properly surface that to people so that, they can responsibly take advantage of that composability is going to be really important. But yeah, hopefully what Superform can accomplish a little bit there. But yeah, more and more assets, more composability, and hopefully we'll finally have, the ability for people to come on chain who really actually need those products, but haven't bothered to spend the time and understand how all this stuff works. So
that's a future I can't wait to live in. And, I was talking to Evan Weiss last week, who was also talking about, us having consumer products where you could, get into Ethereum staking at the press of a button. So, I mean, this future looks very easy and very attractive.
Yeah, it's not going to feel like you're using crypto at all. And that's going to happen by the end of the year.
You think?
Yeah.
Oh.
Yeah.
Big year.
Everybody's been, this has been like the imperative, right? From the Ethereum Foundation all the way up now, thankfully, is that like we need to focus on UX and we need to focus on scaling the L1 and the L2. And, finally, like a little bit more tenable toward, just like generally like DeFi apps on the L1. So yeah, if it doesn't happen this year, it's going to happen like the next year. And this
early
is like
2026.
This is like the number one priority for I think for app developers on ETH.
And do you think developing these types of products that are super easy to use and have all of these benefits, do you think that's going to be enough to overcome all of the bad press that crypto has gotten over the years and continues to get? I mean, we're literally watching, all of these hacks happen. We're seeing users losing their funds, Iran having dabbling in their theft and North Korean stuff. So do you think that there's going to be enough upside that people will forgive, or do their own research on all of the negative press that crypto has gotten? That's
on us, right? To create more good news. I think there's always going to be a bunch of stuff that comes out that the things that make crypto great make it so hard make it also easy for bad actors to play, right? The worst case scenario would be some positive catalyst turning into a negative, something like on the stablecoin side of it, we're decentralizing too quickly and then something might happen. That would be like my biggest concern on good things turning into bad things. But I think that the amount of good things that we have going for us right now will absolutely exceed negative press from North Korea for sure.
We just got to keep spreading that good news.
Yeah. Unless they're growing at a rate that no one's aware of, and they're cooking something.
well, only time will tell.
What if sending crypto felt more human? Pulse just launched Red Packets, a new way to gift tokens with meaning. It's gasless, gamified, and claimable inside group chats only. Think airdrops meet social cues on chain. Backed by smart wallet tech and live across major L2s, Red Packets turned communities into microeconomies of gratitude and growth. No seed phrases, no friction, just connection with value. Check it out at pulse.social.
So beyond Superform, what excites you the most about the evolution of crypto and its integration into mainstream finance and into daily life?
I don't think we've even scratched the surface, really. If you generally look at what people want out of technology. Most of the apps that I use now, it's great to see stuff like Twitter now integrate directly with Polymarket, right? We're finally starting to see how the marriage of on-chain protocols can look like with normal apps that we use. But I think it's more of that, right? We've now proven that what we have on-chain can scale and is a product that people actually do want. But the distribution has never really been there for crypto, right? That's always been hard to figure out. And it's great. If Elon wants to distribute more apps than Twitter, fantastic. Maybe it's a stablecoin next. But whatever those technology apps are, I think we're going to continue to see more native integrations. And then there's all that stuff from 2017 that I also hope comes back at some point. All kinds of stuff that we had talked right about. You had different stuff like ticketing and all this stuff that now we can elevate and create a better experience around those products, because now we have assets on chain that earn more than they do off chain. And I think the idea that we have all these tokenized assets do things that they weren't able to do, now all that can be used to make better versions of the applications that we had in TradFi and just generally any app. We could finally make like decentralized Uber if we wanted to. Like, that'd be cool. All kinds of stuff.
That'd be cool. I'd be into it.
Yeah.
Yeah, I'm also really excited to see what happens with NFTs in this next cycle, because I feel like we saw the growth and the demise happen in the last cycle, and now we're talking about like tokenizing all these assets. Like, do you see NFTs playing a big role in the next cycle, and what do you think that might look like?
I have no idea. I think it's hard to see where crypto does well and NFTs don't do well.
Right.
But what exactly like that takes the form of? It could be like, what I just mentioned was the idea that like all these assets are now productive on chain. If we can then also make NFTs more productive and like this, mature NFT lending and things like that. But there are a couple experiments like that last cycle, but I think it's always hard to find, how to like close the loop on that demand cycle. But yeah, like I hope NFTs come back for some of the ones that I own.
I mean, we like to take risks here in crypto and support people we like. So yeah, and I've been seeing a lot more discussion about them functioning more as infrastructure than as like the speculative art market situation. So kind of excited to see how people find new use cases for it that are not just tied to buying it and making 5,000% ROI in 10 minutes.
Yeah, I hope like the 10,000 NFT collections of like generative art, especially now that we have AI. It's like, what's the edge? Like, how do you actually why?
Yeah, what's the point here? No, it's good. I mean, it's one of those things where it's like you're definitely going to see people be challenged on like, okay, well, we already did this. Like, what's next? And it really feels like we're in a moment where people are asking what's next, not just recreating stuff that we've already seen, but like, what is the future and where are we going?
Yeah.
So to wrap up here, what advice would you give to individuals and to businesses who are considering leveraging on-chain yield, but are still kind of wary of the risks that are associated with DeFi?
Well, I'd say probably the biggest barrier for a lot of those people right now is just the onboarding process. And I'd say onboarding wise, like that is going to be fixed very shortly. You're going to be able to have Web2 style security and logins. You're not going to have to memorize your passphrase, all that stuff. So like the operational risk of it, I think will be substantially lower than it's ever been. The technical and like financial risk, I think, is something that we are still trying to figure out like what the best way to message all this stuff is to users. I'm really excited about some of the stuff people are doing on risk scoring and just generally like frameworks to not just like grade someone after the fact, but actually help create like more secure protocols on chain. There's like a Web3 security initiative that was launched by like Morpho, Cantina, and a couple other DeFi protocols. You have a lot of other people that are, creating risk ratings on chain. Eventually, all those risk ratings get shown to the end user, and then that kind of becomes like a S&P style rating, and users can use that. Or if they don't even want to trust the fact maybe those ratings are changing over time, then eventually they're just allocating to a money manager that's actually like staying on top of how those ratings are changing or something. But yeah, I hope that it definitely can't get riskier than it is right now. And
right.
Yeah, so whatever people would like to see that makes them comfortable with finance, I can confidently say that like all those things that make me comfortable with using my brokerage, like we're going to have those things, same things on chain.
Love that. Okay, so I like to close with a quick lightning round. You game?
Let's do it.
All right. Favorite stablecoin?
Agora.
Favorite meme coin?
Piggy.
And do you think that the tools we've been discussing today, particularly on-chain yield, will be as familiar and trusted as traditional savings accounts by the end of the year?
Ooh, I think it's more like a checking account, but yes.
Yes. Okay. Awesome. Well, Vikram, thank you so much for joining us here. Where can our audience find you and follow you?
On Twitter, handles VIK_RUNA, and Superform XYZ on Twitter. Those places.
Thanks so much for being here.
Thanks for having me. It's fun.
All right.